Hello and welcome to the Morningstar series, Why Should I Invest With You? Joining me today is John Baker. He's co-manager of the JP Morgan UK Dynamic Fund. John, thanks for joining me.
Thank you, Holly.
So in managing the fund, the management team actually sits under JP Morgan's broader behavioural finance team, which is an interesting, and I wondered if you can tell me how does that actually impact the process that you apply when choosing stocks for the fund?
Sure. The behavioural finance process or belief in behavioural finance investing underpins our entire investment philosophy, which is to look for cheap stocks with good news flow and that are good quality. By good quality, we mean strong balance sheets, etc. Where behavioural finance comes into it is that we believe that there are particular personal idiosyncrasies which repeat over time that allow and create opportunities for us to invest in stocks that are going to generate alpha for our portfolios. So, for instance, when analysts are assessing the future prospects of companies, they tend to underestimate the strength of the direction of travel in earnings estimates. They want to be cautious. They don't want to put their head above the parapet because, of course, there's a risk if you do so. You move too far away from the crowd. And it's that causes a persistency of earnings upgrades over time because analysts have underestimated.
Okay, and so if we look at where you've actually got the portfolio placed at the moment, so you've got around a third of assets are in sort of the mega caps, a third in large caps, and the remaining third split between mid and small caps. Is that deliberate, or does it reflect sort of where you're seeing opportunity?
It's not deliberate in itself. We're not making specific size decisions. The portfolio is very much built from the bottom up. So it's really just a reflection of where we're finding investment opportunities at the moment.
And then if we look at where the assets are split by sector as well, I think the sector that has the greatest number of assets would be consumer cyclical. Is that related to the story of the strength of the UK consumer?
The underlying driver of the profitability of those companies is driven by the strength of the UK consumer. And of course, we've seen unemployment figures recently that have come out very strong, 5.3% unemployment. That's the lowest it's been in 7 years. And importantly as well, we're seeing wage growth coming through in excess of 2%. And when you also assess that inflation is running at less than 0%, you're seeing a very strong rise in real wages. So therefore, sectors such as house builders and retailers, airline stocks are performing very strongly as a reflection of the consumer strength.
Well, John, thanks for coming in and sharing with us insights into your fund process.
Thank you very much, Holly.
For Morningstar, I'm Holly Cook. Thanks for watching.